Welcome, techies, traders, and haters. We are here with a brand new series, episode 1 of Building the Basics. Today, we're talking about the almighty RSI. This is a simple little tool to help you get in and out of a trade or even out of a long hold. When's the right time to buy? RSI, or Relative Strength Index, can help you with that very thing. But to punt this football over to Aaron, we're going to take you through a couple of things. How you doing, bud?
I'm doing good, Pat. How are you doing today?
I'm all right, my man. Let me give you some screen here.
So the relative strength index is an indicator that oscillates that helps to let you know when a stock is overbought or oversold. Now, to frame this in a way that might make sense to someone who's maybe new to trading or new to the stock market, we're going to use an example from Zillow. So when you choose a house, and this is just a randomly selected house on Zillow, it's going to give you an estimated value. Now, the way that they're going to come up with this is they're going to base this based on comparable homes that have been sold in a particular area over a duration of time to give you an estimated value of what you might expect to get from your home. Now, they'll have a low side of the value range. You can see on this one, it's 300,000, or on the top range, it's 332,000. So currently, this is the estimate right in the middle of about 316,000. So if you look at the price being asked for on the home, it looks like this is a little over the value of the price you would expect for a comparable home in the area. So you might consider this, if it was a stock, overbought because the value exceeds what the expected range would be. If this stock was below 300,000, or if this home's price was below 300,000, then you might consider it oversold. That's a good deal or a good price to get in compared to the comparable prices that have been seen on the market as of late. So now we can cut over to an actual stock chart and take a look at what that looks like when you're reading a stock. So on a stock chart, and then we're currently showing you using the app called Webull, you can see down here along the bottom edge of the screen, this is our RSI indicator. It's a scale of 1 to 100, and it has a line marked for both the 30 and the 70. These are the most common indicators. When the oscillating line gets above 70, it's generally considered overbought. And when the oscillating line gets below 30, it's considered oversold. And what that's telling you is generally once it gets above 70 and it's there for a little bit, that's an indicator the price trend is probably going to move in the other direction. Likewise, if it's been under the 30 mark for a period of time, it's a good indicator that the stock may be getting ready to reverse its trend and start an upward trajectory. Now, the RSI isn't perfect. Although on average, it's a good indicator, it can't take into account news that comes out in the real world, such as SEC filings, announcements, any of those kinds of catalysts that might bring a stock up or down, recall announcements, things of those nature. It's purely based on the price action over a period of time in the past to give you an idea of what the value should be currently. So you need to use that in conjunction with your due diligence, your confidence in a particular company or a stock, as well as any other indicators that can give you a better understanding of why it's moving right now. And you always want to include what's going on in the news if you're considering entering or exiting a position.
Yeah, and it could be just as simple as, oh, my cousin, he told me that I should get into this stock, Zillow, man. It's really killer. I'm gonna put some money towards it. Even in that one little ability to look at this, if you did that here, you would know that that is a bad thing to do. Most likely, of course. This could go on forever, right? Most typically don't. And so you'd wait for this, which is what we call the famous pullback. You don't have to not necessarily wait for it to hit the 30, because you might wait a long time. Because typically stocks would just hover around in here. This one does break out a number of times. I like to always look at Tesla for stuff like this. And you can see how it spends some time in the middle there, but you'd know, oh man, buy the dip. Here's another opportunity to buy the dip. Mhm.
So all of this is for entertainment purposes only.
Of
But we
course.
hope to help you to understand the tools better at your disposal so you can make more informed decisions when you enter or exit a position.
Yeah, it's very simple. And you can bring up the RSI on most of them. I know that this is the moving average here. You can see in Webull, it's very clear marked up here. You can take it off and it just pulls a full chart. A lot of charters will put the RSI volume. They've got the moving averages, and all of these things are indicators of good times to buy and sell. The RSI is a very simple one, and it can really save you some long-term and short-term headaches.
It may not always tell you exactly when to get in or get out, but it can give you a good idea if it's not the time to do so.
Right. And that's the best. I mean, that's, man, you get excited. Things are emotional, especially if you're starting with stock trading or buying and holding, whether you're either one. It's exciting. And you
FOMO is
need to
real.
simplify. You need to simplify that, that emotion and look at the reality. And these are all indicators and all little helpful points and tidbits for people to get in and out of stocks. And it's a very cool indicator, very simple.
Anyways, that wraps up this first episode. We're going to try to keep them short and sweet. Each one, we're going to try to look at one thing that will help you understand what you're looking at when you look at your stock charts.
Yeah, that definitely brings us to the end of this episode. We're going to look at something called moving averages next time. There's a number of those that we can look at, but this is a good one to start with, and we'll see you soon.
Have a great day.